Have you ever felt the ground beneath you pulse, not from earthquake or storm, but from something unseen, something financial, systemic, inevitable? Today we stand on the edge of a collapse whose echo began nearly a century ago, then faded into history, only to return in a mutated, unstoppable form. What if I told you that the great financial catastrophe of 1929 is not merely a relic of the past, but a warning, and we ignored it? In late October 1929, the world watched the stock market tumble. Fortunes evaporated overnight. Banks faltered. The promise of prosperity betrayed the people who believed in it. Wikipedia +2 Encyclopedia Britannica +2. The crash of 1929 was not only about numbers, it was about trust. Trust in the markets, trust in banks, trust in the narrative of endless growth. But once that trust was broken, the machinery of collapse accelerated. We are now in the midst of a different kind of crash, one that tips not just stock prices but entire systems, debt, credit, currency, faith in institutions. And this time, the difference is this: there may be no escape hatch. The allure of the bubble. In the years before 1929, the world believed in the miracle of the market. In the United States, the Roaring Twenties roared with industrial expansion, speculative zeal, margin buying, high leverage. Encyclopedia Britannica +1. Banks extended credit to brokers. Ordinary people borrowed to invest. Bubbles grew in broad daylight. When the bubble burst, the mechanism of pain was already locked in. We do not just relive that pattern, we replicate it. We stack debt higher, we blur the lines between speculation and reality, we borrow from the future to pay for the present. The very foundation of the system trembles, and this time, the shock absorber is gone. Warning signs in the wilderness. The crash of 1929 didn't begin with a cataclysm. It began with subtle yields. A tightening of credit, a rise in interest rates, a bubble too bloated to sustain itself. Encyclopedia Britannica +1, these are not new. But there is an urgency now that was not present then. Global debt is higher than ever. Markets are interconnected deeper than ever. The speed of collapse is greater than ever. Pause. Ask, what happens when the world's major financial centers fall all at once? When contagion leaps across borders, across asset classes, across currencies? In 1929, the crash began in the United States, but the world felt it. Goldman Sachs +1 today, the network is global. If one pillar falls, the skyscraper collapses. When no refuge remains in 1929, even as markets crashed, people looked for somewhere to hide: cash, gold, real estate. Some survived. Some recovered. But now imagine, the assets that once offered refuge are fragile. Bonds are overpriced. Real estate in many markets is inflated. Currencies tied to weak regimes are shaky. What if there's no safe harbor? This is the crucial difference. In the past, you could pivot, sell, move, wait. But when the crisis is systemic, when every pillar is connected, the escape routes are gone. The safety net is frayed. The parachute has holes. When trust disappears, collapse becomes cultural. It seeps into households, into jobs, into dreams. In the Great Depression, unemployment soared. Families lost homes. The social contract ruptured. FDR Library +1. This time, the stakes are broader. Global supply chains, digital currencies, shadow banking, corporate debts, all woven together. The old crash. The new world remember the crash of 1929? Most know it as a moment in finance. But it was really a moment in culture. It changed how people viewed work, savings, government. It changed expectations. It changed society. Federal Reserve history +1 today. The new crash will rewrite more than markets. It will rewrite how we live, labor, consume, relate to money. Think of how fast everything moves now. Algorithmic trading, high-frequency flash crashes, global debt instruments. The machinery of finance is not slower than in 1929. It is far faster. And when one part misfires, the dominoes fall before we realize. In 1929, you watched the ticker, you saw panic. Today, you might simply wake up and find the lights have gone out. Why we are repeating what we swore. Not to repeat, After 1929, the world promised, never again, that the central bank behind the crash would be very sorry. Federal Reserve history. Yet here we are. Why? Because human nature doesn't change. When times are good, we chase yield. We ignore warnings. We believe the machine is unbreakable. And when the machine breaks, we still act surprised. The pattern is ancient. Boom, bubble, bust, reset. But this time it is amplified, global, interconnected. We are not simply reliving the crash, we are amplifying it, the moment of no escape. What does no escape mean? It means the system is too widespread to contain. A crash is no longer localized or regional, it is global. It means that winners and losers are not separated neatly. The crash sweeps everyone. It means that what once took years to unravel may now take days. It means that the old safety nets, government bailouts, monetary easing, stimulus might not function, because the principle is not just broken, it is overloaded. Here you feel the tension. If a major economy defaults, if a currency collapses, if a major financial institution fails, it sets off a chain reaction. One node falls and the system shakes. The past assures us of this. The collapse of one bank can trigger many. In the Great Depression, thousands of banks failed. Encyclopedia Britannica +1. Now imagine the same failure, but overlaid with shadow banks, derivative webs, global trades, digital currencies, and real-time capital flows. The escape plan you thought you had, liquid assets, safe bonds, real estate, is no longer reliable. Because the systemic collapse doesn't spare safe havens. It transforms them. Hope amid the storm, and yet, hope remains. Not the naive hope that this time we'll be immune, but the quieter hope that we can understand, prepare, adapt. If we recognize the patterns, we may not prevent the crash, but we may soften the blow. We look back at 1929 not to lament, but to learn. Investors who survived did not rely on luck. They recognized risk. Countries that recovered rebuilt systems. FDR Library +1. So the question is, will we listen? Because the alternative is not merely collapse, it is cascading breakdown. But listening means moving. It means not assuming that markets will always rise. It means asking who benefits, who loses, who's left holding the bag. The mirror of our time today. If you zoom out, you see the same outlines. Excess credit, inflated valuations, faith pinned to untested instruments, regulators playing catch-up, global interdependence. You see the ghosts of 1929 in new lights. Digital, leveraged, hyper-connected, and when one small fault appears, like a thin crack in a dam, the pressure behind it is enormous. We stand in front of that dam now. The water is rising. We may still build relief valves, but the time to act is before the flood. What it means for you. If this story seems like high finance, far removed, think again. Because when the system that supports jobs, pensions, banks, homes falters, the effect is personal. Families lose savings. Generations postpone dreams. Nations rewrite their social contracts. The crash of 1929 was not just Wall Street's tragedy, it was Main Street's drama. Investopedia +1. Today, if the system cracks, the fallout may skip the elite and land on the rest of us faster than ever. Which brings us to the final question, will we escape this time? History shows we never really escape until we confront. The crash of 1929 taught us about regulation, responsibility, and risk, but only after the devastation. We are now in the late stage of the cycle, with fewer buffers and greater momentum. If you watch this unfold, if you recognize the pattern, it is not too late to act. But if you believe this time is different, that the rules have changed, that you are safe, you may find yourself utterly exposed. So ask yourself, what are you relying on? Assets, institutions, promises that may not hold in a system-wide collapse? Where is the fragility hidden in credit, in banks, in your own finances? And most importantly, if the dam breaks, what will you do? Because we are reliving the great crash. The difference now, there may be no escape. And in that reality, The only wisdom is to understand, to prepare, and to choose the fight for survival in calm, intelligent, mysterious ways. Because when the lights go out, the questions begin, and the quiet fear of what comes next becomes the loudest truth. Thank you for joining me on this journey. I'll see you in the next chapter of Shamshair Hidden Millions.